IG Bank welcome everyone to the 2021 Swiss Trading Day, a 3 days event bringing you industry experts and top speakers to the comfort of your office or your living room to shed light and provide with super relevant, insightful, and actionable content to support your trading. So thank you very much for making the time into your busy calendars and showing up to this event. My name is Dorothée Borca-Dumortier. I'm the head of sales for IG Bank, and I'll have the privilege to moderate today's sessions and interact with you and our amazing speakers. But before we dive in, just a little bit of housekeeping to start with. Please do have a look at this usual disclaimer about our products. It's important. This session will be recorded and you'll have a chance to get access to that recording on our website that I anyways highly recommend you to visit. This is meant to be your event, so we want to make it as lively and interactive as possible. So you'll obviously have the opportunity to send in some questions and comments in the question and chat box function of GoToWebinar. Now, after working from home for so many months and probably attending a handful or an awful lot of virtual events, you probably already are familiar with the GoToWebinar drill, but just in case, to ask any questions or put some comments, you can add these in the little tabs on the bottom right end of your screen. You can unattach them and just put comments in there and ask any question. I'll do my best to get through them during our evening together. And talking about the event, let us have a closer look at our Swiss Trading Days edition this year. Just before saying a few words about us, IG Bank, well, the 2021 edition of the Swiss Trading Day is our fourth edition already and pretty similar to last year in the sense that this edition will again be 100% virtual, but to ensure we have a wider access to all of you, you'll benefit from the upcoming sessions in 3 different languages and also cover a range of hot and relevant topics. So don't miss out tomorrow, a very interesting session in German by Salah Boumidi, our head of market by IG, who's going to focus on recognizing and acting on seasonal patterns. Well, quite relevant right now. And then you'll have a very insightful session with Natasha Grimm from IG Bank on the world of possibilities CFDs can offer you in your trading. Definitely one not to miss. Then on Thursday, you are invited to the French session with Joris Zana, who's a great market analyst from Daily FX, and he'll talk about where there'll be movement and action on the market in 2021, focusing on Forex and cryptos. This will be followed by another great session with Harold Sivel and Andreas Ruhlmann from IG Bank on yet again how CFDs can greatly support and enhance your trading. So we've got quite an agenda here, don't we? We really hope you're going to enjoy the journey with us. And most importantly, that all these experts will enlighten, inspire, and support you. But before we start, allow me to say a quick few words about us, IG Bank. IG Bank is part of the IG Group that was born in the UK back in the 70s. The group is listed on the FTSE 250, and it's a truly cutting-edge technology company with a historical footprint with offices based in more than a dozen countries to service clients from all major financial centers. So zooming in Switzerland, we are present, established, and developed a lot since the inception of the bank in 2014. We have a banking license. We are FINMA regulated, meaning that we abide by the highest possible standards of the industry, and the monies you deposit with us benefit from the highest level of protection as we are an Easy Swiss member. We're happy to meet and greet our clients in 2 amazing offices in Geneva and Zürich. Well, nowadays, it's a bit more difficult because relationships tend to be a bit more virtual for the reasons we all know, but still it's important to state that in usual times, we are thrilled to meet our clients in prestigious locations. So now probably the big question you might have is, all right, seems to be a great bank, but what's in it for me really and my trading? Well, we pride ourselves in extending synthetic products with world-class execution, deep liquidity, competitive spreads and commissions, some great analytics tool to take the pulse on your trading strategy and outcome, and of course, a follow the sun dedicated support, meaning that when our Swiss office is closed, you can always have someone on the line to support you. Now, if you have a look at the screen right now, well, these icons say it all. We offer very extensive access to market through our CFDs. With us, you can trade indices, shares, forex, fixed income, ETFs, commodities, cryptos, well, a really great deal of assets. We also greatly differentiate thanks to our advanced technology to cater for your specific needs with various award-winning web-based platforms, proprietary execution system, think about L2Dealer, and other third-party solutions such as the MT4 or Pro Realtime. As I was telling you just a second ago, we offer this great support in various languages to ensure no one is ever left without someone speaking the same language and providing with excellent service. Now, focusing on our Swiss team, I'm happy to report, and I can definitely confirm that this is a super skilled team, very senior, with more than, I'd say, 60 years of accumulated experience. So, you know, when you talk with us, you talk with diligent, serious, and very professional people. But that's very important to mention, I believe, because expertise, stability, reliance are of utmost importance when it comes to choosing your trading partner. Last but not least, we have this excellent learning platform, the IG Academy, that you can benefit from and rely on at any times. And you have modules for all levels on a very broad range of topics, again, to support your trading. So here's in a very few words who we are, what we do, and how we believe we greatly and very qualitatively support our clients. We'd love to hear from you and see how we could support. So let's get in touch. We have this great website that we strongly encourage you to visit. And of course, you can call us to engage and ask any question you may have. But now, fortunately for you, as you see Peter Tuchman's photo popping up on your screen, this will not be a monologue. We are very lucky today to be joined on the virtual stage by amazing experts. Some of you may already know, or I'm sure you'll want to get to know more about them. And let's start with Peter Tuchman. Well, not sure Peter needs an actual introduction, as I'm sure you already know him as the Einstein of Wall Street or photographed trader or its most iconic stockbroker. Iconic, yes. Well, Peter is a living legend on the New York Stock Exchange, and he's been trading there since more than 35 years. So it's a true privilege for us to benefit from his world-class experience and insights tonight. And now presenting our second amazing speaker. Again, he's an actual legend in the trading commodity. Please meet David Green. David is a Wall Street trader with more than 30 years of experience. His rapid success enabled him to retire before he even turned 40. David, by the way, you need to give me your secret. He was responsible for trading in some of the largest listed companies at the New York Stock Exchange, including IBM, Bank of America, Goldman Sachs, and many others. Since leaving the New York Stock Exchange, David has been successfully training, teaching, and mentoring trading students and investors worldwide with his informative and proven methods. So now I think I won't have you waiting much longer. So here's your event coming. Hope you'll enjoy the journey, and I'll see you in a bit for the Q&A session. Just remember to send your comments and questions in the chat and question function. All right, let's get to business and to kick off with Peter's topic today. Peter will help us understand and enlighten us on trading markets through a pandemic context. Well, the topic couldn't be more relevant, I guess. Hi, Peter. Good morning, because it's still the morning in New York. How are you doing today?
I'm okay. It's an honor. Thank you.
Thank you so much for joining. Peter, the floor is all yours.
Thank you so much. Thank you, Dorothea. Thank you, everybody. I'm honored to be on the podium with Mr. Green, a friend of mine of many years, and Marzena and Yannick. And clearly, I'm not the best looking person on the panel, but I surely have the best hair day, which is the most important thing for me, right? Good hair day means a good market. Welcome, everybody. Welcome to the 200 plus people, new prospects for IG. Welcome to the IG family. I am one of the faces of IG. There are some ads all over the world on billboards that say when all others are losing their head, you must stay with yours. So it's an honor to be part of the IG family and whatnot. And I'm inviting you into my world here on the floor of the New York Stock Exchange. It is a place that all of you, one day, hopefully, everyone who's on this call, everyone who goes on, hopefully, to buy the course that David and I are going to be discussing, which is going to be part of the IG Academy also, will get a personal tour of the floor of the New York Stock Exchange from me when the world reopens again. So it's really an honor to be part of this event. Welcome everyone in Switzerland, Swiss Trading Day 2021. I wanted to really share with you, I mean, it's so exciting for me to still be back here on the floor of the stock exchange, one of the greatest financial institutions in the world, a building that was built in 1903, right? Years prior, we had trading that was done outside of this building underneath a buttonwood tree. In 1903, this institution was built and has been the place of all institutional trading since then. I'm going to try and demystify what it takes. I'm going to give you a little background on me. Obviously, I am a doppelganger of our friend Mr. Einstein, though not as smart. Surely I do have that look, and that's one of my brands. I wanted to, you know, being part of something from Switzerland. I'm so hopefully, if you enjoy this event next year, David Green and I will fly over and be there in person. I do have a wonderful memory as a child of traveling to Switzerland at the age of 6 with my parents. We ended up going to Interlaken. We stayed at the Beau Rivage. We ended up traveling up to the Matterhorn in Zermatt. We went to Jungfrau Joch. Maybe some of you know that. And we skied. I was a young kid, but that's my memory of Switzerland. I've traveled through there a number of times since, but have not spent any time there. Unfortunately, but hopefully we will in the future when the world opens up again. I'm going to share a little bit of my story to demystify the fact that, you know, we're in an extraordinary time here, and this is an opportunity for me to share my world, my love of finance, my mission, which is just the love of finance and markets and trading, and my message, which is one of education, right? And I know everyone's had a really hard year all over the world. There's not a human being on this earth who has not been touched by this pandemic and whatnot. But I think that gives us a very super relevant opportunity here in 2021 on March 9th, having lived through this, and I know by no means are we at the end of it, but we're surely in the tunnel on our way out. And so when it comes to being able to share with you something I love to do, I have a number of mottos. One of my mottos is, and it was not something I made up, is if you find something you love to do, you will never work a day in your life. And so I'm going to try and demystify what it takes to become a broker, to become a trader, to get involved in finance. I'm going to give you a short version of my journey, how I got here and how I've brought myself up to this day, because that's super important. There are, in 2020, we found an amazing opportunity through a number of firms, IG one of them, to sort of democratize and to knock down the barriers of entry of a lot of younger people and new people into the marketplace and be able to trade. So as Dorothea described, IG is one of the preemptive platforms worldwide to trade this market in all different instruments, in all different ways. And as we know, one of the most important things is to constantly have access to your money, right? That there's nothing about when shutting things down or not being able to have access to your money. So IG, as one of the greatest platforms in the world, is really, it's an honor for me to be part of that. So to describe my history, I mean, I grew up in New York City. I have Eastern European parents. You know, I was sort of a bit of a hustler in high school. I ended up going to college and studying agriculture and business. I really sort of there cultivated a little interest in business. I came back to New York after college and I started trading commodities. I opened up a record store modeled after a European record store in 1980. In 1983, I left New York and I went to work in West Africa. I was doing accounting for a Norwegian oil company. And in 1985, I came back to New York. I grew up here. This was most of my life was spent here. But in 1985, I was in my mid-20s and I really wasn't clear what I wanted to do. And I was able to get a summer job here on the floor of the New York Stock Exchange as a teletypist. And it turned out that this was obviously my calling. The floor here and trading and finance and stocks are an incredibly exciting thing, and all the more now in 2021, right? So I think between David Green, who you guys are going to meet a little bit down the road, who's been my friend, and there he is, he's waving to you, has been my friend, my teacher, my educator, and my mentor for a long time. We're going to try and give you sort of an insight into what it's been like trading over the last year and a half, what it's been like trading crises from the crash of '87 until now, and to try and demystify what it takes to get here, what kind of a journey one must follow to become a trader, whether you choose to do this for your life, whether you're going to start trading on the IG platform just to make some disposable income to invest in your future. One of my other mottos is invest in stocks and not stuff. Okay, we are as a society globally a consumer-based group, right? We love stuff. We like iPhones, we like sneakers, we like the next new thing. And what we find in the markets, and as there may be some people here who have been doing this for a long time, and there are young prospects who have not done this before, you guys know so much more about the stock market and the public companies that are traded here than you think, right? Everything that you use on a daily basis, from the cereal you eat to the sneakers you wear to the iPhone you use, right, to the computer you use, all are based on companies that are here that are traded companies. So that's one of the exciting things. So not only here am I going to try and open the doors to you on what I do here and what it's been like on my journey to get here and what it's been like so incredibly over the last year and a half. And then I'm going to pass the ball to David Green, who's going to really, as my educator and my teacher, I am still, after 35 years on the floor of the stock exchange, a student of markets, a student of stock, and a student of global economic situations. And that's why I've sort of chosen the topic on trading through crises and trading through the pandemic. So let's talk for a little bit look, we've got 5,300 stocks here on the floor of the New York Stock Exchange, right? There are stocks traded all over the world. There are stock markets throughout the world, in the UK, in Geneva, in Brussels, in Germany, and whatnot. So obviously our market here is one of the most preemptive in the world. What goes on the floor of the New York Stock Exchange affects what happens in all markets going forward. I've been down here for 35 years. Since I told you I got here in 1985 as a teletypist, the atmosphere, the adrenaline, the human element that I found here was my calling. It's what I found that I love to do. And I've been here doing that ever since. And I found over the last number of years, since 07, 08, when my brand and my face has become a little more known, that letting people in on this world, demystifying this world, and then through my relationship with David Green, educating people about this world and getting people excited about what we, Mr. Green and I, feel is the most exciting thing in the world to do. This is what wakes me up in the morning. I eat, I dream, I sleep, stock market. Sometimes, unfortunately, it wakes me in the middle of the night, but that's okay too. Anyway, so let's talk about how markets trade. Historically, right, stocks that are traded, or investments that people make. And just a disclaimer, I don't recommend stocks. I'm not your financial advisor. I'm here to motivate you, inspire you to find something you love to do within this milieu here on the floor of the stock exchange, within the trading world. And then Mr. Green is going to open your eyes and open the doors to you to the incredible thing about technical analysis and education on how to trade markets. But for me, as a motivator and as your moderator in chief here, I'm going to try and inspire you to understand what's so exciting about what's going on behind me here on the floor of the New York Stock Exchange. 5,000 plus public companies, Exxon, Nike, Under Armour, Snapchat, whether it's in the world of social media, whether it's in the world of tech, the Teslas, whether it's cryptocurrency or not. there's so many opportunities. There's so many corporations. There's so many companies that I know you guys can find excitement in. So what we're doing is we're kind of connecting. I'm a big branding, marketing, advertising guy. That stuff excites me. I'm here on the floor of the stock exchange. The branding, the logos, the corporations, the advertising, the media that goes on here on a daily basis, whether it's celebrity-based, whether it's corporate-based, whether it's launching of new companies, to me is the most exciting thing in the world. So I try and inspire people to find within this world something that excites them. So I'm going to proceed to give you a little bit of a story about how we've traded the markets in the past. Originally back, you know, we started in 1903. They traded under the buttonwood tree outside. They came into this building in early part of the 20th century. And this room, as I said to you, for everybody who signs up today for the Wall Street Global Trading Academy, you get a private tour of the New York Stock Exchange when the world opens up again. You're going to get a little piece of this. But the bottom line is, since this room opened in 1903, it's been the hub. It's been the financial institution that's, whether it's symbolic or it's an infrastructure play, it is the place that represents the human element in trading, right? We've seen technology take over so many different businesses, as it's taken over our business to a certain extent. But still, in 2021, there are still humans here on the floor of the stock exchange. I'm here. There are brokers here. We use the price discovery process to open up IPOs and new stocks. We have the SPACs now, which is a new thing, right? So let's talk for a minute. Let's go back to the crash of '87. I started on the floor in 1985. Mr. Green did as well, and you will meet him. You see his face on the screen right now, and we started around the same time, okay? Hi, David Green. Okay, so we know markets go up and down, stocks go up and down. Normally, stocks go up and down on fundamentals, right? Fundamentals being earnings per share, on guidance, forward leaning, on new products that they're acquiring, new companies, on mergers and acquisitions. That's how the investment community has been based for all these years. We are in a new rules 2020-2021 mode, and I'll go on a little bit later to explain that to you. But let's go back to the crash. So back in the day, we had what was called open outcry here on the floor. Everything was done on paper. You've seen the movies. If you haven't, when we're done today, go out and watch them. Wall Street, the original movie with Michael Douglas, what an incredible thing. Mr. Green was in that crowd, as was I, here on the floor of the stock exchange. But there are other movies that talk about it, whether it's The Big Short or whether it's Wolves of Wall Street, and not something I particularly want to promote because the guy's just a bad guy. But anyway, we were here in 1987. Everything was done on paper. It was just the beginning of computers, right, entering into this world. We had Quotron machines and whatnot. But there was an open outcry situation where human beings, and there were thousands of them. There were 1,654 brokers. There was support staff with clerks and whatnot. We stood there and we ran on telephones connected to trading desks all over the world, here in New York, whether it was Goldman Sachs, Merrill Lynch, whatever where you were doing. And we have to realize that why was there a crash in 1987? To date, the largest sell-off, 20%, right, within a 2-day period. Now, if you read about it, and it's something that is worth reading about, because crises within markets and actual crashes, and David Green will discuss to you what's the difference between a crash and a consolidation and a retracement and a sell-off, because it's significant. And it's really a function of the percentage of where the market's been. Back then, stocks traded about 50 million shares a day. Today, we trade 2 billion shares. Back then, the stock market dropped 600 points. I don't even know where we were on the Dow Jones Industrial Average at that time, but it's a matter of percentages. We've gone up 25,000 points since then. So what did happen in 1987? That's why it was called a crash. There were a number of reasons and a number of explanations, and we'll never know so many of these different things. People claim that it was the beginning of computerized trading, that there was some insurance algorithm that caused some kind of a sell-off. People were way over margin because the market had been up triple digits over the 5 years leading up to the Black Monday in 1987. The market started to sell off. I was a clerk at the time. Everything was done on paper. I have to admit, I've been here for 35 years. It probably, and I'm sure David Green will reaffirm this, that it was probably the most significant moment of real fear and sell-off and crash that I've seen in my life. I mean, I've seen the financial crisis of 07, 08. I've seen the Brexits and the China tariff story under the Trump administration. And I saw what happened here on March 23rd, 2020, and we'll obviously go on to describe that. But I'm just trying to give you some frame of reference of what happens in crisis, what happens in markets when everybody is selling, right? We know that historically, and David Green will attest to this, historically markets go up. If you look at the graph of the Dow Jones, the NASDAQ, the S&P 500, it goes from bottom left to upper right. Net, at the end of the day, over time, markets go up. And every time we've seen an actual crash or a massive sell-off or a retracement or consolidation, those have been more buying opportunities than selling opportunities. But people get emotional about money and people get fear. I'm here to try and set the stage, which Mr. Green will pick up on, is that besides demystifying the journey that it takes to get here, that we're trying to tell you that these are opportunities to not be scared of markets, but to have faith in the process, because we're going to present to you an incredible opportunity to learn and educate yourself and give you an awesome toolbox on how to trade markets going forward. We're in a new mode here. Things that are going on, whether it's technology, whether it's volatility, whether it's a pandemic, whether it's any kind of a crisis, are going to keep happening going forward. Hopefully never anyone has to ever relive the kind of year that they've had so far, as have I, having suffered from Corona and had quite a year from hell, excuse my language. But anyway, so that was the crash of 87. It was a very human generated emotional sell-off that was quite drastic, fast and furious. The market sold off by the end of trading. It really looked like a scene from Trading Places, if anyone's ever seen that movie, where there were piles of paper on the floor. They were dragging people off other people. The market closed down 608 points, and people went out of business. Companies went out of business. Market makers went out of business. Those who were able to survive that and capitalize themselves on that day to the next day ended up making a lot of money in it. So that was one example of a crisis that was traded. We didn't really look at it that way. Basically, it was just everybody sell, sell, sell. I was a clerk at the time. I was being given orders, just go out there. Here's a stack of sell orders. I want out, and everybody did. All right, so let's go on to the next crisis, and that would probably be, so that was basically a computer generated, overbought, extended situation where one sort of tick of fear and anxiety within the marketplace, along with a little bit of a computer glitch, caused a bit of a sell-off, fear, emotion, sell-off, fast and furious. Now, every one of the crises I'm going to describe to you had different parts of the puzzle that contributed to the way the crash or the sell-off happened, and then how it is that we navigate through that as people who are trading, right? Back in those days, besides that crash of 87, markets weren't moving that much, right? I remember it. I'm a little older than some of you, perhaps, but back in the old days, there were movements of 5 points, 10 points. If you saw it on the news at night, the Dow Jones Industrial Average closed up 5 points today. Well, that's not the case today. We have volatile moves of 1,000 points intraday, generational moves that happen on a day-to-day basis, hour-to-hour basis. Let's go to the financial crisis of 2007. It was a financial crisis. It was based on the problems that were going on with mortgage-backed securities, the fact that they were packaging things that shouldn't have been sold to people who could not afford it, repackaging them, selling it, and it caused a huge bubble that ended up suffering from, and it leaked into the financial institutions and the banks. People were way leveraged, over leveraged, and you ended up having the financial crisis of 07, 08. We were still trading on paper back at that time. It was a big emotional sell-off, but it was a prolonged sell-off. Companies went out of business. It was very unique in that way. And so it's hard to really remember now how we traded it. I don't know if David was still on the floor at the time, or no, I believe he was probably already teaching. But it was an extraordinary time. It was a prolonged sell-off. It was a prolonged pain. Companies went under. Some banks survived. Those that did survive, the companies that got bailed out, right? Once again, as we've seen now over the last year, When things looked that ugly and the financial structure started to crumble, the Federal Reserve stepped in to backstop it, right? Some companies were sent to the wolves. The other companies that were really backstopped ended up going on to become wonderful companies, but it took a long time, right? So if you think about how did we trade that crisis, it was sort of unusual because it took 8 years to get back to even over the financial crisis and the bailout and whatnot. So that was a crisis in itself based on financial infrastructure breakdown and mortgage-backed security problems with credit default swaps. Another incredible story to read about. There are movies about it. I would suggest everybody to find their path into this journey that we're trying to get you excited about is to go and check these things out, because you're going to want to go away after you've seen this conversation with me and go on to get what you get from David on the learning side to find out what it's been like throughout history on trading crises and crashes. So let's go back. Let's go from there to 2021, to 2020, February 12th. And it's an incredible story, really, because the market under the Trump administration, for whatever reason, whether it was really tax breaks for the rich, whether it was any number of reasons, the market, whether it was a final function of the Obama administration's backstop of all the financial institutions and a beautiful rise that we saw from 2007 until 2016, the market was in incredibly strong mode. The consumer was in healthy mode. The balance sheets of the banks were in extraordinary condition. Interest rates were low and unemployment was at its low. Take that situation into 2016, and then the next 4 years that proceeded, the market was strong, right? We did see sell-offs over Brexit. We did see sell-offs over the Trump winning the presidency originally. We did see sell-offs off of North Korea. We did see sell-offs during that period of time, though the market seemed a bit frothy at times. There was a lot of money behind it. The Federal Reserve was throwing a lot of things behind it. Interest rates were at a low, and everybody was healthy. The economy was healthy. And what we do find often happens before a crisis is that markets and economy go hand in hand. The consumer was robust. The balance sheets were robust. Unemployment was low, interest rates were low. And so the economy was strong and the market was following suit with that. Companies had good earnings, guidance going forward was solid. And then boom, what happened? February 12th of 2020, markets were trading at a high. David Green will tell you how actually his technical analysis showed that the market was a little bit overbought at that point. But all that being said, on February 12th, we did not really know about the coronavirus yet. The economies were doing great. Balance sheets were robust. The consumer was hopping, and the economy in the US, and not as much globally, but for sure here, was solid, right? And the markets were super strong, and we traded at record highs on February 12th, NASDAQ, Russell, S&P, and the Dow. And what ended up happening over the next 6 weeks, from February 12th until March 23rd, we saw the market sell off double digits, fast, furious, devastating. Now, one thing that was invented back in '87 was a thing called circuit breakers. When markets, what makes us different here on the floor of the stock exchange from other marketplaces is established since '87 is when markets sell off more than 5, 7, and 10% at a time over a crisis. We slow down the trading. We stop trading so that people have a chance to identify what's really going on. Is it emotion? Is it real? And then we reopen markets. So what happened? The virus started leaving China. It started coming across the world. It started devastating Italy. It came to Europe. Obviously, you people in Geneva know that. And it started to hit the United States. It wasn't until March 13th that it was noted by our president at the time that this was a pandemic. There was a lot of denial. Who sold stocks from February 12th to March 23rd? When the market sold off thousands and thousands of points a day. I was here on the floor. We would open the market and go straight into a circuit breaker because we dropped thousands and thousands of points. Was it insider trading coming out of the Senate? Was it people who had been given a heads up, even though the public was not being told that we were going to be in trouble relative to the coronavirus? It doesn't really matter, politically, economically, or what. What ended up happening was the reality of a massive, and this is what differentiates the pandemic, the COVID-19 pandemic, than any other crisis, be it economic, financial, or what, that we've seen from the crash of 29 until 2020, is that it was a health crisis, it was a global crisis, and it was an economic crisis beyond anybody's possible imagination. And when you have that, it's like the perfect storm, if you've ever seen To Note Another Amazing Movie. When all the forces hit together, the shit, excuse my language, the SH blank T is going to hit the fan, and that's what ended up happening here, right? So how is this crisis different than all others in its format? And then how do we go on to trade it in a different way, right? So what ended up happening, it being a health crisis, made it very personal for everybody. I know down here, when we started having the markets trade off thousands and thousands and thousands of points a day, well, that's what we do. We're in the front lines. We understand that. That's part of what we are trained to deal with. But when we started really worrying and the information started trickling, you realize that the floor of the stock exchange is sort of the delta of not only the markets and it's the delta of information. And we started hearing what was really happening around the world with the virus. And then when you start looking at each other and realizing, I don't know if your mother is going to survive this, or whether you're going to stay healthy, or whether someone's going to die, or whether there's not one human being on the globe who is not affected by this virus. That's never happened before. So that in turn added such a different dynamic to this whole thing. It got very emotional, personal, and health-wise. What ended up happening was the reality of the virus and its effect on killing people and the broad pandemic sense of it. And the fact that we were going to go into a global shutdown, right? The reality, the economic reality, which we haven't even begun to really feel yet. The market surely hasn't felt it. I believe the economy has globally. When you've got companies that within the hospitality space, the airline space, the gaming space, any space, right? Restaurants not open, everything. You're seeing a complete shutdown for 3 months, 6 months, 9 months. We still are in situations, often there are still people in Europe in full lockdown. Here in the United States, we are in a 75% lockdown, even though the vaccine is starting to be distributed. But what ends up happening is it's the global ramifications, the economic ramifications, and every one of these public companies here is suddenly it's virtually out of business when you can't get on planes, or what happened stage 2 was 25% of the plane can be full. None of these things are business models that you can trade. So now that I've presented this doomsday situation to you all, and you all experience it, so you all know what I'm talking about, right? And we saw that from February 12th, a robust, strong, solid market with a health global financial crisis hitting it, sold off 10,000 plus points on the Dow, double digits on the S&P from February 12th to March 23rd when we hit a low. What happened on March 23rd? Now, it's all fine and good when markets are going up. Everybody, let me step back a minute. Sorry, I got a little ahead of myself. On March 23rd, what happened, which has happened also in other crises and other crashes and sell-offs. And March 23rd was a crash, no question about it, where we hit levels that were so oversold, quite devastating for everybody. What was more important was the reality globally and economically of what the future was going to bring. And there was way too much more than we didn't know than we did know. Okay, think back, guys, a year ago, we really didn't know anything what was going on. We've lived a year now and we're still sort of in the dark about it. So let's talk about what happened now. A lot of the sell-off from February 12th to March 23rd was emotional, right? A lot of it was people liquidating positions. A lot of people saw their 401ks, large institutions saw their investments, and hedge funds saw their investments get cut in half. And that was quite devastating across the board. And it obviously had its ripple effect throughout the world. But what ended up happening on March 23rd, which was unheard of to a certain extent, was the Federal Reserve stepping in, which it's done on crises in the past. but coming up with a bill of $3 trillion. Not in 2007, there was $1.8 trillion bailout that was presented to the corporations and to the banks over a 3-year period of time. And that's why it took 8 years to get back to even on the financial crisis of 07-08. What happened on March 23rd, 2020 was a $3 trillion bailout package that happened over 90 days, ladies and gentlemen. What did that do? If you look at the graphs, and I'm sure Mr. Green will show it to you, that from March 23rd, over the next 90 days, the market virtually recovered all of the losses that it had suffered over those 6 weeks prior, from February 12th to March 23rd, against a backdrop of complete devastation, of tens of thousands and hundreds of thousands of people dying all over the world, of businesses shutting down on a massive scale, a absolute devastating global economic crisis. The market rebounded to back to lead to even, and has proceeded to over the last year even go higher. All people wanted to know was why did that happen? How could it happen in the eyes of what's going on globally and with the virus? Why would the market rebound like that? Well, at the end of the day, the fear was that we are not in control of what's going on for the pandemic, health-wise and whatnot. However, we can control the markets. And obviously their hope was that if we can get the market going and we can create some kind of a market recovery, and as I described to you, sometimes markets and economies go in concert, side by side. During crisis, they do bifurcate sometimes, and they go on opposite sides, right? One takes a left, one takes a right. This was a perfect example of that, right? Where the economy had deep unknowns, deep fractures in it, that we are still feeling here a year later. However, the market got $3 trillion. It got a stimulus package that was unheard of. The Federal Reserve here in the United States was buying everything, bonds, treasuries, everything they could buy, plus a stimulus package, plus money to individuals. And the result, which was obviously their intended result, was that the economy would rebound. Obviously, everybody's hope was that that the market rebounded. Obviously, we hoped the economy would catch that backwind and strength of the market rally and rebound as well. That has yet to happen. We are here now in 2021. The economies are still fractured. We do see a little light at the end of the tunnel with the vaccine. But however, the economies got you. You're going to have to give me a couple more minutes. Are still trying to catch up with the market. Can you only imagine that if the market had not rebounded and the economy is where it was today, how bad the situation would be global? So let's go back now, because I've got 2 minutes to talk to you about how to trade these pandemics. There are companies, as we saw in 2007, that spent 8 years trying to get back to even. What some people did, and the democratization of the marketplace in March, with everybody sheltered in place, brought 40 million new people into the marketplace. I hope some of the people who are on this call are some of those people who are now going to get involved in the market and join the IG family. But what we saw was that anybody who hit a button on March 23rd and sort of hopped on that train made money. Okay? That's not always going to be the case. There were industries like energy, like airlines, like hospitality that got decimated. There were companies like Zoom chatting, like Peloton, like homewares that rallied incredibly with the stay-at-home restrictions that we had. So if you were a smart trader and you were able to identify what stocks were going to benefit from the pandemic, and I don't like to use that word, and those that were going to get hurt by it, you were able to trade this market. Mr. Green is going to take this story, right, and explain to you how to trade through a pandemic, right? When things are all going up, it's all fine and good. I hope everyone made a lot of money. That and the Gamestop story and all that. However, when stock markets have volatility, the only defense against that volatility is an education and technical analysis. And that's where you know when to buy it, how to get out of it. It's not about how much money you make. It's about how much money you keep. So I'm going to throw it out there to everybody. I hope I've given you sort of a backdrop, which I'm going to soon toss to Mr. Green, who is our technical analyst, who's our teacher and our educator, as I am a student of this market. I've given you what I've seen from down here over the last year and a half. Mr. Green is going to explain to you how to navigate you through volatility, and I'm open for questions.
Excellent. Thank you so much, Peter. Super interesting. Thank you so much, learning from your experience.
Thank you.
Would that be okay to ask a few questions because we got a few interesting ones?
Sure.
Um, one quite interesting from Urs is, in your opinion, why is China's economics handling the pandemic better than the US?
Hmm. That's a really hard question to answer. I think there's way more about China that we don't know than we do know. We've obviously seen it, not to get political, because we've had relationships with them under the Trump administration. We've had relationships in the past. And obviously, it's a regime that is not sort of in concert with your government and or ours. So there's a lot more unknowns than there are knowns. I don't really know how the Chinese government is. Chinese government owns a lot of US equities and has huge exposure to our economy in so many ways. I don't believe that if they were suffering, as we are suffering, we would necessarily hear about it. Okay? So I think that the posture that China gives off, and we've seen it when we are trying to identify how the virus was started, where it came from, and how it proceeded to go across the country. The transparency of the reality of it all and the economic effect of it, right? I don't think we know that. So I think the best question is, I don't know. I just think we don't see the real picture.
Mm-hmm. All right, and another interesting question from Alexander. He's saying, "Hi, Peter. Do you think it is now a good moment to buy stocks despite the high valuations and rising rates?"
So one thing I really didn't get into talking at the time is, I started to, but I didn't finish it, was that normally investing was done on fundamentals. And I think we're in a completely different new rule right now. The volatility that's still in the marketplace, the unknowns, right? It's sort of like an elastic rubber band that's being held back. We know that eventually, whether it takes a year, 6 months, a year, or 2 years, that we're going to get back to our lives and people are going to get on planes again and go to the movies and go to sporting arenas. We don't know how long that's going to take, whether people's comfort level, whether the herd immunity is going to really give us that moment where we're going to just be back on the streets again, at a cafe, hugging each other, getting on a plane or a cruise ship. So we don't know really how the economy is going to make up. I think the market, it per se, is a forward-looking marketplace. I think what Mr. Green will help you understand is that it's hard to make a blanket statement, is now the time. The markets are trading at record highs. The economies around the world are still in trouble. The reopening story is still a lot more unknowns than knowns, right? So I think it's more, and David will address this, that within a market where we're seeing volatility and intraday moves of thousands of points, we're seeing a rotation out of tech and into other stocks that are really quite ruthless, right? We're seeing big moves in the market on an intraday basis. So I think David will address it more. I think from an investment point of view, and I'm not a financial advisor, I think trading the market on technical analysis as opposed to historic fundamental analysis is the way of the future for the next while, until we're able to get clarity about earnings and guidance that are not just sort of up in the clouds. How are people going to really be able to know what their earnings are going to be like in a year when we've been shut down for the last year? How fast are people going to get back into their lives and become consumers of all the things that these companies use as their bread and butter? So I would defer to Mr. Green on that story.
All right. Okay, so maybe this is something we can kind of cover in a moment with you, David. Maybe another question for you, Peter,
Sure.
if that's okay. So we've got a question from Herbert saying, in your opinion, how long will the Fed continue to quantity easing before increasing interests?
That's a good question. You know what? Um, I don't know the answer to that. The economics of it all are really not my wheelhouse. I think right now we've seen unprecedented moves by the Fed to support this market to an extraordinary state. Look at where the economy is globally and look at where the market is. They could not be in more opposite places, right? So they know their sure thing is pouring gasoline on that fire, really hoping that they will cause a backwind and that the economy will come up behind it and end up flying that plane all the way across the ocean. I'm not sure when that's going to happen, right? I think, I think this is there's no rule book for what we're experiencing economically, globally, and market-wise. So I think it's sort of important once again, and I think sometimes this is the best answer to these questions is, I don't know. The Federal Reserve is going to backstop this economy and the markets in every possible way, hoping the economy catches up with it. I'm not really sure when they're going to make a move on interest rates, although they've given us some inkling that it may be sooner than later.
All right. And now maybe let me just
Did I
ask
lose you?
well, we cannot see you anymore, but we can hear you. So I think it's going to be okay. Hopefully the connection is going to be back in a second. But if you can still hear us, that's fine. So maybe just another question for you, Peter, and maybe you already touched base on that a moment ago. But if we have new traders into this session, what would be the number one piece of advice that you would give to these new traders? We've lost you, Peter. Oh, yes, I guess so.
I could certainly take that question.
No,
Oh,
I got it. I'm good.
okay. Okay,
Can
you're
you hear
back.
me?
Welcome back.
Can you hear me? Okay, good. Sorry about that.
Yes,
I heard the
absolutely.
question. I appreciate the question. I'll let David answer it when I'm done. But I think, look, there have been barriers to entry in the markets for a long time, right? And I think that what's happened, the perfect storm, the democratization of trading, whether it's through apps and whatnot. Obviously, I'm not a big fan of the app situation. I would rather be with an institution that when I call IG up on the phone on Saturday because I'm worried about my investment, one of you nice people is going to answer the phone. So I think that you should be with an institution that's got a name in red like IG Bank. Okay, I think the barriers of entry to the marketplace has opened a whole new horizon for new young traders in the marketplace, and that's incredibly important. However, what we've seen, and then plus sheltered in place, people losing their jobs, people needing new disposable income, has made it so that they are looking for something. There's an appetite to get involved in the markets. And what is the preemptive thing, and Mr. Green will address this in the biggest way possible, is about education. I always use the analogy where if I decided I wanted to become a pilot, I wouldn't just read a book and go on an online webinar to become a pilot, go to the airport, rent a plane, and cross the ocean. That's insane. So the same thing would be when I'm talking about money, whether it's my money, my family's money, or anything. The fact that we are, I forget about regulation, forget about where the blame lies on some of these things that have been happening lately with the Wall Street bets and the Reddit thing. For the new young trader, right? Hopefully many of them are here. It's education, it's technical analysis. What I've learned from David, and I still revert to David, who is a master technical analyst, is the bottom line: when markets are going up and everything looks all bright and shiny, there are people who still don't know when to sell. It's very easy to hit that buy button, watch it go up. And what we've seen over the last number of months is stocks go from 20 to 483 and right back down to 30. So you need to understand, as it were, if you were flying a plane, you need man hours on the flight hours. You need to be with a co-pilot for a long time. So in order to get into this market responsibly, you need education. And the best defense against a volatile market, and we are seeing an unprecedented generational move in markets that over the last a year and a half, is technical analysis, right? It's not fundamental analysis, it's technical analysis. And what Mr. Green will show you in his part of this conversation, and Wall Street Global Trading Academy is collaborating with IG Bank, is going to teach you the language of the stock market, chart setup, technical analysis, and how you can give yourself the edge, the probability that when you trade this market and you enter it at the right time, and you have taught and have the tools to get out of it at the right time, you can make money, keep money, and preserve your capital.
Great. And maybe just one last question.
Okay,
Again,
sure.
if that's okay. Another one from Alexander, who's asking great question. Thank you, Alexander.
Thank you,
So
Alexander.
maybe it's a bit personal for you, Peter, but he's asking, what's your favorite book about investing or technical analysis?
Ooh, you know what? That's a hard question. I'm actually not a reader. I'm much
All
more of a
right.
listener. Yeah, I'm
Uh-huh.
actually not. It's my brain is running way too fast, as you can see, to read a book. I can't sit down long enough to read a book. But there is actually, there are a number of great books. I think there's the day in the life of there's a number of great books on story of Wall Street, but I think David, I'll defer to David on that question. I'm not sure. I mean, all I can say is, you know what? Check out the course. You know what? Wall Street Global Trading Academy. If you're not a reader like me and you want to learn the language of the stock market and technical analysis, setting up your charts, moving averages, trend trades, and options and swing trading, which is the bread and butter of a day trader. And I'm sure most of the people on this call are hopefully going to go on to become day traders, whether they do it for their whole life, whether they take what they learn in this class into their next job interview, or whether they just put it in their toolbox to have with them at any point where they want to go on and do this, is from our course, is being taught by David Green, and it's all about technical analysis.
All right. Thank you very much, sir. Mission accomplished. We've learned a lot. So
My
that
pleasure.
was a really great session. So
Thank you.
maybe if we transition towards David's session, something quite interesting that we could touch base on. So we've done a few days ago this Twitter poll about in our community about the pandemic and if it actually changed their strategy. And interestingly, the results were about 60% of no. So it's some sort of a good transition, I guess, for you, David. And again, thank you very much, Peter. That was really, really amazing and super great to hear you, of course. So yeah, again, this transition to you, David. So obviously, it's good to have you too.
Thank you.
What do you think of that result? That 60% of the people that answered that Twitter poll say that nope, the pandemic did not change actually my strategy. How could we try and put this into perspective, in your opinion?
Yeah, I mean, first of all, thank you for having me, and I'm very excited to be here with IG Switzerland. And hello to everybody out there. Well, we have not changed our trading strategy throughout the whole pandemic. Everything that we do is based on technical analysis and putting the odds in our favor every time we get into a trade. I could say the 40% of the people who had to switch their trading strategies probably didn't have the right one to begin with. So that's why they had to change their trading strategy. So when you have a good plan and you follow your money management rules and your technical analysis, there's no need to change. Now, that being said, over the years, we of course have changed our trading strategies because the markets have changed. And again, I'm doing this for 35 years and there is no ego in trading. And that's a big thing that all you beginning traders out there have to learn, okay? We're gonna be wrong on trades, we're gonna be right on trades, but I'm always willing to learn and adapt to the changing markets, and you have to. A couple of things that I want to just expand on, a couple of questions that Peter asked. Is it a bad time to invest in the stock market now? And this is really age relevant, right? If you're a young person out there, there's never a bad time to invest into the stock market. How you do it is important though. You know, as Peter mentioned earlier, we're at levels in the market, we're almost at all-time highs again. And anytime I'm making an investment, and when we get into this a little bit, I'll show you some things that we did recently. You don't start and shoot your whole gun the first time you go into an investment. You got 6 bullets in your gun. So what you should be doing, especially if you're young, is pick the stocks that you like, start buying them, and then you buy them if they go down and give you opportunities to get more into the same stocks or whatever investments that you have. Would I personally be running in to buy the stock market at these levels right now myself? No. I would not. We've had a tremendous run off the lows in the stock market. But that being said, if you're already invested, the best time to be buying stocks, and I say this all the time, is when people are scared. When people are scared and they feel like they want to throw up, right? Because you open up your 401k or whatever it is, and it just looks horrendous to you, that's usually the time when you should be buying more stock. For 150 years, all the stock market has done is go up over time, right? So it's very, very important for young investors. And Pete says this all the time also. Buy the things that you use. Buy the things that you like. Buy the things when you walk into a store. You know, I love Apple, right? Apple to me is always been one of the greatest companies in the world. But even that being said, it's down 30% over the last month. So it's giving people an opportunity to get into the stock at lower levels, in my opinion, is for longer term. So I always tell people who are young, you cannot go wrong by investing in the stock market. It's going to pay off at some point. Another thing I wanted to touch on that Peter talked about is what's the best advice for beginning traders? And this gets a little complicated. There are two very important factors in trading. The really two that only matter, and it's money management and it's technical analysis. And those are the most important things you have to learn as a beginning trader. I'll add one thing: don't get caught in the hype of what you see going on in the stock market nowadays. As Peter mentioned earlier, we've seen stocks go from $20 to $480, and the smart people who made money in the stocks are the ones who bought them and sold them. But there were a lot of people who never sold them because they had dreams of these things going to thousands of dollars and all becoming instant millionaires. And that's actually the generation of traders that has been born since this pandemic started. And a lot of them have gone through trading accounts because they didn't know. Look, it's very easy to get into a trade. Once you get into a trade, knowing what to do is the most important thing. We're not going to make money on every trade that we do. We're going to have losses. Anyone who tells you that they don't lose on trades they do is just lying to you. Okay? So education is by far the most important thing for anyone. And I'm not saying it if you take our course or anyone else's course. Let's start with this. How many people who are with us today have never traded before? Give us some Ys. If you've never traded in this market before, let's type in a Y, and let's see how many people have never traded before in the market. And if you have, let's give that a second. See how many people who are with us. Type in a Y. Come on, guys. I want to make this as interactive as possible for everybody out there. I just started 3 months ago. Good. I'm too young to start trading. Okay. Not yet. I'm on a course. Okay. Excellent. Only traded on demo mode. And how many people are actively trading? Actively trading. They wake up, they trade either a few times a day or every single day actively. Active for 20 years now. Excellent. All right. Last question is, how many people out there are making more money than they know what to do with? How many of you? All right. So I wish. 0. Exactly. I've lost money. Okay. That's the answer I get most often, right? So I've been doing this trading for 35 years. I've been teaching for 15 years. And the most important thing for any beginner, just lost money. Okay. I can almost guarantee the people out there who are doing this for a little while and just lost and are just losing money don't have a plan, right? So what I want to do now is I want to share. Let me know when everybody can see my screen. And this is the IG trading platform, all right? As you can see in the IG trading platform, they have 100 different things that you can trade. There is something for everybody, depending on what you want to trade. They have FX, they have all the different indices that you can trade. So there's a million things that you can trade. There's something for everybody. The thing is, when you're going to trade something, and we're going to use the US 500, okay? So I want to show you a chart of the US 500. Let's get this over here. Let me move this. Hold on one sec. Give me a second. I want to make this clearer and bigger. Why is that not working for me? All right, here we go. Give me 1 second. Okay. Give me 1 second. I don't know why my chart's not coming up bigger. All right, it's fine. We can use this. Okay. So here is a chart of the US 500. Let me see if I can make this bigger. It's okay. Can everybody see this chart over here of the US 500? I want to make sure it's clear. Everybody can see it. All right, good. So we are looking right now at a 5-minute chart of the US 500. This compares to our Standard & Poor's 500. And this is a candlestick chart. And every one of these candlesticks is 5 minutes of trading if we're looking at a 5-minute chart. The most important thing besides money management is technical analysis. Everything that we do is based on technical analysis. Click on Add Workspace on the RHS top. There we go. Thank you very much. Let's get rid of this stuff. All right, beautiful. That better for everybody? Excellent. Okay, I just want to remove all this stuff. How many people that are with us today have ever been to a casino and gambled? I'm just curious. How many of us have been to a casino and went gambling? Sure, yes, me. Okay. Why do we know that every time we go to a casino, we're going to lose? You're going to. And there's one reason for it. It's because the odds are against us, right? Every game that you play in a casino, the odds are against you. We have no edge. That's exactly right, Giotano. By using technical analysis, we put the odds in our favor of our trades working. If I'm just looking at a chart right now of the US 500, I would be throwing a dart in a board, guessing whether the stock is going to go up or down from here, right? So if you guys want to write this down, I'm going to share with you some of the technical analysis we use. And we use exponential moving averages right here, okay? And I'm going to tell you which ones that we put in. All right. We use a 9, a 15, a 65, and a 200 exponential moving average. All right. Now, when I'm looking at this chart, I have what we call spots of support and resistance in this chart based on a 5-minute, that's a daily. Let's go back to the 5-minute. Okay, based on a 5-minute chart. Now, if we look at all of our moving averages, they are all below where this stock is traded, or indice, it's fine. And anytime we're looking at a stock where the moving averages are all below where a stock is trading, those are levels of support where we might want to buy a stock. And if you look over the course of just the last 15 minutes, when this indice pulled back and hit these 2 moving averages here, what happened? It stopped going down and started going up. So that is what we call support levels. And the reason now, at least I have a sound reason why I want to get involved in this stock. It's telling me that it's pulling back to a support level, and it's a level to buy the stock. If we were to start to go down from here, well, it tells me my next level that I would want to buy the stock. And if we went down even further than there, it tells me the next level where I would want to buy the stock. One of the great things about the IG platform is that it's very, very easy to navigate. I'm going to do a trade right now just to show you guys how easy it is to navigate. And I think that maybe the stock is getting a little stretched out. It's going a little too far above the moving averages, and it's setting up for a short trade. Now, keep in mind, and let's make this clear, okay? There are 2 ways we can make money in the stock market, okay? 2 ways. We can buy a stock, and if it goes up from the price we bought it, we make money. We bought Apple at 120, we sell Apple at 121, we bought 100 shares, we make $1 on that trade. But the other way you can make money in the stock market is by shorting a stock. And when you short a stock, you're selling something you don't own in the hopes of buying it back at a cheaper price. And if you don't understand the difference between long and short, you're losing half of your trading opportunities, especially as a trader. So we really concentrate on day trading, although we do swing trading and we do options trading also. One thing I don't worry about is my long-term investments. Everybody has their long-term investments. You have your 401k, you have your Roth IRAs. Over time, those are going to take care of themselves. They always do. The market's gone up for 150 years. What we try to do as day trader is capture short-term moves in stocks and indices where we can make money by buying and selling the stocks during the day. Sometimes we will do a swing trade. the difference between a day trade and a swing trade is we will hold the swing trade for a few days or maybe a week when it gets to a better level. And I'm going to show you some of these in a little bit where we might want to invest in that trade for a couple of days. But let me show you how easy it is to navigate the market. So the platform on IG. So I think this is getting a little, and again, this is not technical analysis. This is me showing you how easy it is to navigate this platform because I want people to see how easy this is. If I want to sell this indice, all I have to do is hit sell. You can do a minimum of 5 contracts. So we're going to do 5 contracts and I hit place deal. Okay, I now have a position in this stock. It tells me the exact line where I did it. I am short 5 contracts and it keeps track of how much money you're making or losing. So because it's going a little higher from where we are right now, I'm losing £2 right now. What I want now, and again, this is just to show you guys how easy it is to navigate this platform, is for this indice to start going down from here, because when we're short, we make money when a stock or indice goes down. If I wanted to sell a little more now, because I think it's going too high again, very simple, I hit sell, place deal, and now I have 10 contracts. Okay, so that's how easy it is to place orders on the IG platform. It's really a beautiful thing. Every time you do a trade also on almost any platform that you can do, you can set a stop order that limits the amount you're going to risk on any trade. And the first thing that I always do, and I'll show you when I get to my platform because it's easier, is we worry about risk. We never worry about how much money we're going to make at first. When I do a trade, my thinking is, how much am I willing to risk on this trade? Then I worry about how much money I'm going to make after that. So one of the first rules for every trader out there is, and it's mega important, this is part of money management, you must limit the risk on every single trade that you do before you worry about how much money you're going to make, okay? We're going to have losing trades. I can tell you that this market has been absolutely spectacular this entire year. I mean, it has been nice and volatile, which is what we want. As a trader, I want volatility. You know, Pete was talking about, look, if we go back, let's look at a little longer term view in this, okay? Let's go to a daily chart and let's go to a weekly chart. Since we had the meltdown with the pandemic, look what this indice has done, okay? Left to right. All it has done was gone down since we hit those lows back in March. So this is generally speaking what markets do over time. And if you look at this, now this is a weekly chart, okay? Every time this stock pulled back and hit a support level, what did it do? It went up. It went down, hit a support level, it went up. It went down, got a little bit of support level, and went up, okay? So at least now when I'm looking at a chart and I have my moving averages in there, it's telling me where I might want to make trades. Another thing we want to add to our charts is what we call the relative strength index. So I'm going to show you that now. Just RSI, okay? And we're going to set this on 20 and 80. So again, write this down. These are things that you should have set up in your charts. And we're going to hit apply. So if we look back in March, when the pandemic hit, okay, what we're looking for in a relative strength index is if a relative strength index gets below 20, what that's telling us is that it is way oversold and we can expect a bounce in that stock or indice, okay? And if you look back here, the relative strength index at one point got to about 22, which is very close. And look what happened to the stock, the indice, ever since it got that relative strength all the way down there. When we were trading in this pandemic here, this was telling us that we're going to get a reversal in the stock because stocks don't stay oversold for that long without having some kind of a bounce. So relative strength we're looking at when a stock goes below 20, it's basically telling us we're going to have a bounce and it's going to start going up. And when the relative strength gets above 80, it's basically telling us that the stock was too high and it's going to start going back down. Another thing we can do, let's go back to our US 500. Okay, and you can see right now on the little trade that we do, we're down £5 and £7 on this contract. Okay, also in your IG platform, you can go to where it says positions. It tells you the amount of contracts you have and how much money you're making or losing on those contracts. So it's very, very easy to navigate for everybody out there who wants to, should be using the IG platform. It's very, very simple to do. Okay. Now, I want to share with you guys, and again, this doesn't matter what product you're trading. I want everybody to realize that. When you have the proper technical analysis in your charts, it doesn't matter what project, what stock or indice that you're trading. Okay, can everybody see my chart now of Gamestop? All right, let's take a little longer view at Gamestop. Okay, and I have all my moving averages in. I also have what we call pivot points in, which you can add to your IG platform also very simply. And let's take a weekly look at Gamestop. And this was a stock that was in the news. Everybody knows that they had what they call a short squeeze in this stock. And the stock went from $20 to $483. This is when I tell all my beginning investors, I don't want you getting involved in this hype, okay? Because a lot of traders got involved in this and bought the stock at these very, very high levels, and then it went all the way back down, and a lot of those trading accounts got wiped out completely. I want to show you a trade that we did today based on Gamestop that happened about an hour and a half ago, and it's just a beautiful thing. Let me show you this, okay? So again, we have our moving averages, our 9, our 15, our 65, and 200. When a stock is going down, as Gamestop did here, we are looking for opportunities to buy. So that's support. When stocks are going down, we look for levels of support to buy, and when they're going up, we look for levels of resistance to sell. Well, look what happened when Gamestop went right down to, and it might be hard for you to see, to $223 and hit our gold line. Can everybody see what happened after we hit that line? You guys tell me. Did it keep going down or did it start going up? You guys tell me, which one did it do? It started going up, right? So it went down and exactly hit a support level. This is a trade that everybody in my room did. We bought the stock at $223 because it hit a support level. If it would have went below that, we would have had a stop order protecting our loss. And if it would have went below that by, let's say, $1, we would have gotten out of the trade. In 5 minutes, we are on a 5-minute chart now. The stock went from 223 to 233. So this day trade that we all did in my trading room, now we didn't hold it for 10 points. But if you bought 100 shares here and made 5 points on it, you made $500 in 5 minutes. This is how important technical analysis is when you're trading. And when you have the proper tools in your chart, it's going to allow you to find the levels where you want to buy and sell stocks during the day. For those of you, look, not everybody can sit and trade stocks all day long. We understand that. So some people out there can swing trade. And what I mean by a swing trade is anything you hold more than one day. So I want to show you a couple of instances where we did this recently. And it was just some incredible, incredible stuff. All right. And again, it doesn't really matter what the stock is. This happens to be a stock called Labu. It is a biotech index. We were watching this stock, and this is amazing, guys and gals, go from $185. I want you guys to see what happened when it hit our 200 EMA. It went down to $71. We had a support level at $70.71. Everybody in my room turned into an investor in this stock now. I'm not trading anymore, okay? This stock went down almost 60% from its highs. Exactly hit that white line. And in 2 days, the stock went from 70 to 95. So these are the opportunities that you are going to find when you use technical analysis to do your trading. So very, very important. We use our 9 EMA, our 15 EMA, our 65 EMA, and our 200 EMA. I'm just going to try and show you a couple more of these. Oh, when me and Peter were talking about the US 500, which is the SPY, okay? We were talking about this a little while ago. And we had this little, first of all, for the last 2 weeks, when we had this little downturn in the market, everybody said the market is crashing, okay? The market is not crashing. It's not even coming close to crashing. It didn't even correct, right? I think from our highs to our lows, we were down about 4.5% in the market from our highs to our lows. But what I want to show you is we had a daily level, okay? Can we use the same? Yes, I will get to that. We had a daily pivot point in our SPY when it went from 386. Everybody see this little dot here? That's what we call a pivot point. It hit that dot at 372, and it exactly stopped going down and started going up. This is not an accident, ladies and gents. When you have the proper technical analysis in your charts and you know how to read your charts, it puts the odds in our favor of every single trade that we do working. Does it mean every single trade's going to work? No. That's why we protect ourselves if it doesn't. But instead of us just throwing a dart in the board, and then you're just gambling, if you're not using some kind of technical analysis in your trading, you are 100% gambling. And you could get lucky. Yes, 100%. You could get lucky and you'll be right for a period of time. But I can tell you this, over the last, and this is documented, over the last 33 trading days that we had, we made money 31 out of the 33 days. Documented. And the way we do it is by being patient, disciplined, and waiting for our trades to set up. I'll show you a couple other ones, and then I want to talk to everybody about money management. Again, this is not a mistake. Look what happened in Overstock. Okay, there's another stock that we happen to look at, and this is going to happen in any of the indices that you watch on IG Switzerland's trading platform. It's going to work. I don't care if you're trading Forex. I don't care if you're trading Bitcoin. I don't care what. So someone just asked, can we use the CMAs for Forex, or do you have a different setup? No. Anything that you can put a chart to, your technical analysis is going to work, which is the beautiful thing about it. It does not matter what you're trading, okay? Any product will work. Again, we were looking at a stock called Overstock. Look what happened when it got to our daily little dot right here. It stopped going down and it started going up. Okay, so for everybody out there, I want you to note, and people ask me all the time too, Dave, why does the technical analysis that you use work? And why do you use that technical analysis, right? Why do you use a 9, a 15, and a 65, and a 200 exponential moving average? Well, the bottom line is that that's what works. And it took a long time, a long period of trial and error to figure out which ones work best for our trading style. So when you combine your technical analysis, and I want to take some questions about technical analysis first before we move on and start talking about money management, which is the most important thing you will ever talk about as far as trading is concerned. In the course that we curated, I tell everybody who is a beginning trader or an advanced trader, if you don't have the proper money management skills, I don't care what you do with charts or anything else, you're going to fail as a trader, okay? Someone just asked, how do we screen stocks to trade for? That is a great question, okay? You can screen stocks, you can trade indices. We have what we call, and I'll show you guys. I have a watch list that I look at every single day. And on that watch list, it shows the stocks that are moving. And most platforms will give you this. I'm pretty sure we could get it on the IG Global Trading platform. It shows the stocks that are moving the most by dollar amount and by percentage. So when I start my day at 7:30 every day. And the first thing I'm going to do is go to that watch list and look for the stocks that are moving the most that day, either by dollar amount or percentage amount. And those are the first stocks we're going to look at. And then we start looking for technical setups in those stocks. And if they're going to come to technical levels based on those stocks, that's what we're going to trade. Beyond that, you should, and we do, have a group of go-to stocks or indices, in your case, that you should watch every single day, that you get familiar with, that you're comfortable with, that you know your technical levels with. You know, what we find is, and what you should find is, if you're having a particular success trading an indice or a stock or whatever it is, that's what you should be concentrating on. And the exact opposite is true. If you find that you keep going back to the same well in something that you're not doing well in, you should eliminate that. At the end of every month, I have all of my traders, and you should do this too, no matter what you're trading. And again, I don't care what tool or what indice you're using to trade. Go at the end of the month, look at how you're doing with your trades. If you find something that you're doing very well in, well, I guess you should concentrate more on that. And if you find something that you keep trying to trade and just lose money in, that's probably one that you should eliminate, right? And I have a list of those. I probably have 10 stocks that I've traded in the past that no matter what I do, I'm wrong for whatever reason. It just doesn't work for me. And you know what? I don't trade those stocks. I eliminate them, so I don't use them. All right. I want to show you guys Gamestop right now. Let's see if a trade sets up in this. So I want to show you what I'm looking at in Gamestop right now, and then I'll get the questions. Gamestop right now is trading at $238. Okay. We have our 65 EMA at 229.11. That's down $9 from where it's trading right now, and that's a support level. When stocks are going down, I'm looking for levels of support to buy the stock. So here's what I'm going to do. I'm going to put an order in my account. It tells me exactly the price. I don't have to guess. That's the beautiful thing when you use moving averages, okay? I don't have to guess at what price I'm thinking about getting into this trade. It tells me, and it tells me 229.10. So I'm going to put an order out, and you'll see it go in Gamestop to buy it. And I'll explain why, and I'll explain this is what we do all day. This is what a good trader should be doing all day. And I'll hit submit. And if you see, you'll go to my platform and you'll see I have an order to buy 25 shares of GameStop if it gets to 229.10. Everything that we do, and you should be doing as a disciplined trader, is if this happens, this is what I'm doing. I'm not guessing what's going to happen. I don't know if GameStop's going to keep going up from here, but I do know if it goes down to my technical level on the chart, it's telling me to make a trade in that stock. And good traders, I can tell you this right now, should be bored most of the time. We are looking for opportunities. People that are making 50, 60, 70 trades during the day, first of all, you're decreasing your odds of being successful. It just doesn't work when you're doing that many things. By being patient and being disciplined, you're putting the odds in your favor of all of these trades working. And I could put up, it doesn't matter what stock someone mentioned Apple before. Okay, let's look at Apple. So here is a 5-minute chart of Apple, and it's trading at $121.13. This is what we call probably a base trade. And if you purchase our course, you're going to learn each of our 5 different trading techniques. We have a technique for every single thing a stock can possibly do. But I'll explain to you guys what I'm looking at right now. So Apple is basically going sideways. Okay, it's going sideways. It's not really going up, and it's not really going down. But what this is telling me, if it starts to go up a little higher from here, it's breaking out of this little basis that it's in, and chances are it will continue to go higher. Okay, where is my resistance? So every time I put up a chart, the first thing I'm thinking is, where's my opportunity? Where am I buying it? Where might I possibly short it? You can see we have a pivot point right here, and it tells me again at 123.43, where if I didn't own Apple, I would short it, anticipating that if it goes up that high, it's going to stop going up and start going down. That is what we call resistance. So when we find support, we want to buy a stock. When we find resistance, we want to short a stock or sell something that we own already. So when I put up Apple, okay, I have 2 opportunities. Maybe it breaks out of here and goes higher. If it continues to go much higher, I am going to short the stock for a trade. Let's take a bigger picture look at Apple, because Apple is probably one of the most loved stocks on Wall Street. It always has been, right? But even the most loved stocks on Wall Street don't go up all the time, okay? So I'm going to go and show you guys a weekly chart of Apple, okay? And we can see right before Apple's earnings got released in January, the stock made an all-time high of $145. And this is important because you don't trade companies, you trade stocks. And that's a very important thing for people to differentiate, okay? Stock can be the greatest company in the world. It doesn't mean it's a good trading stock or a good investment, right? Anyone who bought Apple up at $145 has endured a 20% pullback in this stock. Is Apple a different company 2 months ago than it was then? No. What happened was there's a huge rotation in the stock market out of these tech stocks and into growth. because the market is changing. Interest rates were going way up for a period of time. It's just not their cup of tea right now. And this happens, okay? And it happens. We were looking technically at Apple, okay? And I went to my daily chart and it didn't quite get there, but we were looking and it told me again to buy the stock at $114. That would have been down almost 30% from the high. I would have recommended that everybody swing trade Apple at those prices, or if you're not in it, to start an investment in it, because you're getting a 30% discount from where their stock was 2 months ago. It's not a different company, okay? Their earnings were spectacular. It's just a function of the market. So what's important is for even people who are just investing out there, when you see daily and weekly levels on your charts, that is a good time to start investments in these stocks. So we had a level at 113, and we had another level, which would have been beautiful. Well, it's never getting to 72, but that would have been the next level. So I had a level on my weekly chart, daily chart of 113, and I had a level on my weekly chart of 103. That's beautiful. I'm an investor in Apple between those two levels of 113 and 103. Now, the way you invest in this stock, if we start buying it at 113, there's a 10-point gap down to our next spot. So you start with your smallest amount. If I'm looking to be 100% invested in this stock for the next 5 years, I'll buy 25% at my first spot. I'll let it go down, I'll buy another 25%. And that's how we'll get to 100% invested in this stock. And I would not mind being for the long term. And again, I'm not giving anybody advice. Everybody trades on their own, as Peter said earlier. I will be a long-term investment in Apple at these levels and just put it away and forget about it. So again, even when you're looking to swing trade or invest, there's a right way and a wrong way to do it, even if you're a young person. So now I'm looking at Gamestop and we can see, okay, it started going down a level, but it's probably not going to get to our level. It's not. It went down a little bit and then it started going up already. So imagine if it went all the way down here. The odds are about 95% that that stock was going to stop going down there and start going up, because it already started going up and it didn't get anywhere near there. So we'll cancel our order. And this is what we do all day. This is what a trader does all day. He's looking through his charts and he's finding his spots of technical analysis to buy and sell stocks. Let's take some questions if we can, because I know, look, to a lot of people out there, this might look like a foreign language, especially if you've never seen a chart before, right? And it is. I tell people, and I don't lie to anybody, okay? I tell people the truth. That's what me and Peter are all about. We're trying to help people figure out how to do this. Look, the bottom line is millions of people have tried to figure out how to do this since the pandemic. Millions. Because most of them thought this was an easy way to make money, right? Trading in a stock. Oh, look, if I just buy the stock, it goes up 200 points the next day. Well, 99% of stocks don't do that. And although this is not a very difficult thing to do, this isn't rocket science. Once you learn your money management techniques and you learn your technical analysis techniques, it's not that difficult. People make this a lot harder than it actually is. And I can't, yes, we're going to get to all your questions in a couple of minutes. I can't stress how important it is to have a plan when you're trading. And there's no such thing as easy money. Look, I tell people the truth. I get 3 kinds of people who come to us, right, to me and Peter to learn how to trade. People who have never traded before. That's a beautiful thing. I guarantee you, after you take this course, if you decide to do it, which we're going to give you continued mentorship. Anyone who purchases our course, we're going to meet with every Thursday night, and we're going to mentor you and answer any questions that you have for as long as you own the course. The most important thing is that you have to get educated. That's it. That's just the most important thing. All right, let's start taking a couple questions. Do you want me to read, or Dorothy, you want to read for me?
It's absolutely up to you, David.
I know there's a lot of them.
Whatever suits you best.
All right. I'll get to some of them. If I miss anyone, you guys can tell me. Okay. Do you need a margin account to do trade trading? And are you too limited by waiting for settled cash if you trade on a cash account? All right. This is a great question. So let's talk about the 3 different types of trading accounts that you can have. And Dorothy, you might know better than me with the IG accounts. Are IG trading accounts marginable? And what I mean by that is, if I open up an IG account with 10,000 pounds
Mhm.
Am I limited to only trading 10,000 pounds worth of indices, or will they give me what we call buying power so that I can extend that 10,000 pounds?
Yes, absolutely. You can do that. Yes, definitely.
Okay.
We've got some margin requirements depending on the assets you are trading, actually. Yeah.
All right, perfect. I know in the US, most of the retail trading accounts are going to want you to start with a minimum of $25,000. That's the way it is. And they will give you 4 times in buying power. In other words, it'll enable you to trade up to $100,000 worth of stocks at any point during the day. That's what buying power is. And it's different than margin. Margin, they can charge you interest on and stuff. Buying power is just giving you the ability to buy more shares of indices or stocks at any point during the day. And what's important to note about that is it doesn't mean you're risking more, okay? You're only, a lot of people say, oh, I have $100,000 buying power, I can lose $100,000 on a trade. No, you can't. You can only lose what you're willing to risk on any particular trade that you do, okay? All right, let's see. Let's say you swing trading on the end of the day close, you get a signal after the close to buy something. How do you get the order filled at the same close next day when market opens? If the market opens with gap, then it ease into potential profit. Blah, blah, blah. Okay, I got it. I got the general gist. Okay. Let me say this. When we are day trading, okay, I will not take any positions overnight. That's what a day trader does. I buy and sell my stocks during the day, and at the end of the day, I'm done. So swing trading is a completely different ballgame. What I don't want anybody to do is, at the end of the day, be in a bad day trade, excuse me, that they're losing money on, and then say, let me see what happens tomorrow. That is a recipe for disaster, okay? You don't do that. So good traders don't turn day trades into swing trades unless I'm specifically getting into a swing trade that I want to hold for a couple of days, all right? Certain platforms allow you to trade pre-market and after-market. Another question for Dorothea. I think a lot of the products that IG offers are like 24 hours, if I'm not mistaken, or some of
Yes.
them are anyway.
Yes, absolutely. You can trade some indices during the weekend. Yes, we have some very interesting features for clients. Absolutely.
Yeah, exactly. So for those of you who really get into this, and you can trade 24 hours a day, 7 days a week. It's not something I recommend, okay? I start my day at 7:30 in the morning. We have a morning meeting every day at 8:30. We start trading the markets at 9:30. The beautiful thing about being a day trader, and again, guys, a couple other important points. Look, I could do this for 5 hours. I know we're not going to get to anything. If you're going to be a day trader, okay, this has to be done with discretionary funds. Again, me and Peter don't pull any punches. We're going to tell you the truth about everything, okay? What I mean by that is I've had people come to me and say, Dave, I'm going to take a second mortgage on my house so I can become a day trader. I'm taking a loan so that I can become a day trader. And I say to them, not with me or not. This is hard enough to do without putting pressure on yourself, that kind of pressure on yourself. It's like going to a casino and saying, I have to win 1,000 pounds tonight or I can't feed my family. That's no way to go into this, okay? And you can't do it. So it's got to be with discretionary funds that aren't going to change your life if, God forbid, it doesn't work for you. And I can tell you this, again, truthfully, for some people, this just doesn't work. They don't have the patience. They don't have the discipline. And you know, the sooner you find that out, the better. That's why I always tell everybody to open your trading account with the smallest amount you possibly can and trade the smallest amount of shares that you possibly can at the beginning. You know, in most markets, and I'm pretty sure IG, you can trade, well, you guys, your contracts, but you can trade fractional shares in most, on most trading platforms. So my beginning traders, I have them starting out trading 10 shares of stock or one contract if we're doing an option. And you do that for a little bit until you get comfortable. The easiest thing to do in the world is to increase your size once you get a little more comfortable with what you're doing. Another thing I tell all my traders is this is a process, all right? This is not a get-rich-quick scheme. There is so much bad information about trading out there, and so many people who are making you promises of unknown riches, right? And so many people who are claiming how much money they make every single day. It's just 99% of that is nonsense, okay? This is work, and I tell everybody, give yourself 3 to 6 months. That's the God's honest truth. 3 to 6 months is how long it's going to take you to get a good handle on this. Now, that's not to say that you won't start making money before that. You get yourself a good mentor, you get yourself a good course. I'm not going to say who has the best one. You'll start making money sooner than that if you start following all the rules. Okay. Here's a question for Dorothea. What is the minimum account that they can open with IG?
But basically, we don't really require any minimum, right? So we'd be happy to engage with clients. We're not requiring to say, let's say, to deposit 5K or something like that. Obviously, we highly recommend for you to kind of deposit that very amount, but we won't close you the door even if it's less than this amount, right? So again, it's not like we don't have a predetermined amount that we would accept.
Excellent. I got another great question, okay? David, do you have a tip on how to maintain self-discipline during trading? This is a great question. Look, we're human beings, right? And we all make mistakes. Everybody does. We're human beings. But when I sit down to trade and I have my keyboard in front of me, right? Okay? This is how I make my living, using this keyboard. And if I hit the right buttons, I get money to come in. And if I hit the wrong buttons, I got to put money back in, right? It's not the Nintendo Wii. It's not a game. When it comes to trading, I'm deadly serious. The way to maintain your discipline, okay? And I have people do this all the time. Look, once you find the proper money management skills and you find the proper technical analysis that works for you, I have traders that have Post-it notes all over their computer that they look at all day long. Don't be an idiot. Have stop orders on every single trade that I do. Don't turn a winning trade into a losing day. Don't trade a winning day into a losing day. And it's either something that you have to develop or not. And that's it. You know, it's not easy. I'm not saying that this is an easy thing to do, but once you find, I'll tell you what makes it easier to have your discipline is once you find that your trades are starting to work, you're going to say to yourself, why would I do anything else? Why would I just try to guess where something is going when my charts are telling me where to do things, right? Even if that doesn't work all the time, I'm telling you it's going to work more often than it doesn't. And it's just something that you have to have all the time. There's no time off in this, all right? How many people that are joining us today can point to 1 or 2 trades that have really hurt their account? Give me whys, guys. And you got to be honest with me. I am like your therapist, okay? How many people out there have had that 1 or 2 trades that they just look back at the end of the day and they were like, oh my God, I can't believe I did that, right? Yeah, I mean, we have all been there. We've all been there. And the thing about your money management skills is I can come back from a bad trade. We're going to have bad trades. I can come back from a bad day. We're going to have bad days. What we can't come back from is those just back-breaking trades that really hurt our trading accounts, right? And how does that happen? Okay? There's only one way that you can lose a lot of money on a trade, and it doesn't come by surprise. It's not like you're sitting there all of a sudden and you're down $20 and 10 minutes later you're down $2,000. That's not a surprise. You know what's going on. You know what's happening as it's happening, right? And the only way that can happen is if you keep buying something or keep shorting something. That's the only way. The only way you can be in a bad trade is if you buy at 100 and then you buy at 99 and you buy at 98 and you buy at 97 and you buy at 96 and you don't plan on taking a loss on that trade, right? So that's why when I talk about money management, it's so important. And IG has these stop orders built in for you, okay? Which is beautiful. When you get into a trade, it's only going to let you lose a certain amount, right? That's it. It's there. And every single trade that you do, the first thing as a trader you have to learn is how to take a loss. That's it. There's no such, look, in my mind, and I tell my trader this, a bad trade doesn't make you a bad trader, okay? It does not make you a bad trade. Losing your discipline and losing a lot of money on a trade, well, that's a different story. The way I look at it, if I execute a trade properly, whether I make money or lose money, it's a good trade. One, I'm making money, and one, I'm preventing myself from losing a lot of money. That's it, okay? That's it. What do you think of hedging the position with a combination of long and short instead of a stop loss? I do not hedge positions when I day trade. I do not hedge positions when I swing trade. I have an opinion based on my technical analysis. It's going to work or it's not going to work. That's it. Either I'm going to lose a little money or I'm going to make more money than I'm willing to lose, okay? Regular stop loss has slippage. Yes, it does, Pia, but it's better. So what Pia, let me explain this to people, okay? What Pia is saying is sometimes you can put a stop order in a stock and it can go below the price that you actually wanted to get out of the trade because it might not be as liquid or it might just go right through that price. What I can tell you about that is I'd rather that happen to me than stay in a really bad trade, okay? That's just the bottom line, right? Okay, I know we got a lot more questions. Dorothy, if you could see any that I haven't noticed, feel free.
Yeah, I think we've covered pretty much, yeah, many questions, and I'm kind of afraid we are running a little bit out of time. Don't want to be rude. I'm sure this
No, it's okay.
yeah, lots of question again coming in, popping in, but conscious of time,
Let me
maybe.
get one
Yeah.
more.
Yes, absolutely. One last more. Absolutely. Go ahead.
Okay. And guys, I haven't even been able to mention money management to you guys, which is by far the most important part of this, okay? As Peter said earlier, it's not how much money you make, it's how much you keep, all right? There are just certain rules that are black and white that you have to follow. I'll tell you this, there's no learning curve to money management. If you do happen to buy our course, that's the most important thing. That is like Moses walking off Mount Sinai with the 10 Commandments. That is what money management is, okay? If you don't have that down pat, you will never, ever, ever be a successful trader. Last one, okay. What is the best time to trade the markets? What are the best times to trade the markets? During the day for day trading? Is it on the opening? Is it on the close? I can tell you this. We have our most success in the first hour to hour and a half trading. That is when we get the most volatility in the market. That is when things move up and down the most. A lot of people are scared of that. No, that's going to be our best opportunities. And what's the most precious commodity in the world that we're never getting back, ladies and gentlemen? It's time, right? We're not getting time back. There are plenty of days that in our trading room, we are done trading in the first hour of the day. People have hit their goals. They've made what they want to make for the day. And I tell them, goodbye. Go enjoy your life. That's it. That's the best part of being a trader. No one tells us when and when we have to trade. We trade when things are good and we're making money, and then we get out of there. That's it. So to me, it's the first hour and a half of the day and the last hour and a half of the day.
Great. All right. So I think we are naturally getting to the end of this amazing session. I guess we could have spent another 2 or 3 hours. Thank you so much, David. Time flies. Thank you again, Peter. Well, key takeaways maybe. Training, 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 right? Patience, timing, discipline, and everything ties back with technical analysis, money management, and obviously a great platform. Is that correct?
That's it.
Fair enough. Okay.
And we have it all here. You have the greatest platform in IG Switzerland. You have Peter and you have Dave Green. And by the way, just Dorothea, for you, look, me and Peter are available to do this for you guys anytime that you want. I know we have a ton more questions that we didn't get to, so we are available for you guys and for your clients and for everybody who visited with us today. Hopefully we'll do this again soon.
Amazing.
Can you guys hear? Yep. Can you hear me?
Yes, we can, Peter.
Okay. Wanted to thank everybody. What an amazing session. David, you were great. Dorothea, you were great. And just see, for everybody who's on here, right, IG is going to be offering you an opportunity to get this course, right? The Wall Street Global Trading Academy. Everything's David's talked about and way more. It's a 6-part series with 17 videos. Very special, very digestible, accessible from anybody who's never traded before to a mid-range trader who's running into obstacles to an advanced trader. Money management, risk management, language of the market, technical setups, chart setups. It's all there, and we do Q&As We will be doing special Q&As for you guys every week if you wish. Twice a month, you can reach us. We will mentor you. That's the differentiator. With IG and Wall Street Global Trading Academy, the collab will give you an availability where if you have questions while you're learning, you can contact us. So that's one of the great differentiators. The greatest platform, IG Switzerland, Wall Street Global Trading Academy. David, in my opinion, one of the great teachers of all time, and I get to make you laugh a little bit with a good hair day. So good.
Yes, and you don't know when to stop speaking.
Well, Peter, you just did my job actually. I was wanting to talk about the Wall Street Global Trading Academy to our guests tonight, but you just made it. So again, just to reiterate for you all, we would be delighted, IG Bank, to extend for free the 8 lesson series, online series with David in English. If you'd open a live account with us in the coming 30 days.
Wow.
What you just need to do actually is to register and apply on our website for a live account, right? Then activate it, and we will make this happen for you, right?
Wow.
For free. So we think it's an actual pretty good deal. So definitely one not to miss, I believe. So thank you very much to all of you for joining us tonight. An amazing audience, excellent question. Thank you for your engagement. It was very lively and hopefully super actionable for you. That was very interesting to take a step back with Peter to try and better understand how trading was really looking like during the pandemic and compared to other period of times. And it was very interesting too to get more practical with David and learn that technical analysis is of utmost importance when it comes to trading. So on this note, I hope, and we all hope, you enjoyed today's program. And if you did, you can always go to our IG Bank's website, where you can find the list of all the upcoming events we have for you. And don't forget the survey we'll send you at the end of this session, this webinar. This will help us in continuously bringing you great content. Again, it was my pleasure to be your moderator today. I don't know about you, but I learned quite a bit. So on behalf of IG Bank, we wish you a great end of the day, and obviously we'll see you tomorrow for a great session in German with Salah Boumedi, and on Thursday for another great session with Joris Salah in French, and each time with our IG Bank's specialists. Thank you again, gentlemen. Thank you very much.
Thank you, Dorothy.
Thank you. Yeah, that was awesome.
It was our pleasure to be here, and you are a tremendous host. Thank you so much.
Yeah, thank you so much.
One last thing, open those accounts. Let's go. Open those accounts with IG. Best platform out there.
And for everybody account in the next 30 days, when the world opens up, I will give you a private tour of the New York Stock Exchange. One-time shot on.
Last question, Dorothy, and then I'm going to let you go. Someone said, what if they already have an account with you guys? Can they still get access to the course?
That's a very good question. We are planning to offer that to new clients and new people coming to trading. But let's have the conversation and trying to open it up for the future about this course, right?
Thank you, Dorothy.
All right. Thank you so much, everybody. Take care. Have a great evening, and we'll see you soon.